Welcome back to Investing with Confidence. I am your host, Joshua David, and we are having so much fun talking about retirement strategies, different techniques with different assets like the options market, the futures market, and the Forex market. Don't forget to subscribe to the Investing with Confidence podcast and YouTube show. So, Al, as we continue this discussion about retirement, I mean, it's been a hot topic for a long time. It seems like everybody's calling in during these retirement sections because people have retirement accounts but don't know anything about them. They don't know what to do. They're told not to know anything about them. And part of that is because they're being conditioned. The public is being conditioned to, trust somebody else. Trust their advisor. That's the old terms you see on the commercials. Trust your advisor. Well, there's not a lot of trust in those advisors because they're not putting people in strategies that are for you, right? There's people are struggling with their returns. They're not getting the returns they're hoping for. Their mutual funds are underperforming. Mm-hmm. There's a lot of downfalls that people don't even know about with having managed money. Now, there's another way. There's an alternative to that. We're seeing more and more people want to be able to manage that themselves. It's called self-directing. Mm-hmm. And but you got to have the confidence doing that. You've helped a lot of people gain confidence in wrapping their arms around their capital. What are some of the things that you're doing right now to help people self-direct their retirement accounts?
Yeah, there's a lot of advantages to being able to self-direct your assets, your retirement accounts. One is that you eliminate fees, which are very detrimental to your overall potential returns. It could be as high as 40 or 50% or more of the assets you could have are gone because of fees and the reverse compounding effect. You also have many more choices than you have in a player-sponsored retirement plan. But there's always that concern. Well, what if I take my own assets and I just don't know what to do? I can't take that kind of risk. Well, when you think about it, in your employer-sponsored retirement plan, who is making the decisions in that plan? You are. You're given a list of things that you can invest in, and typically they're mutual funds, maybe some ETFs, maybe with your 401k now you can do some stock. But for most people, they're in mutual funds. So you decide which mutual funds, and then you decide when you have the opportunity to make changes, which ones to change out of and into. So you're already controlling your assets, and you're controlling assets that have the potential for basically mediocre returns because the fees are quite high within the mutual funds. You're also paying a fee for the plan or to the plan sponsor. So when you self-direct, and by the way, anytime you leave a company, you have the opportunity to roll that 401k into a self-directed IRA. Now, you eliminate the fees by doing that. You can still do the same mutual funds. You can still invest in the same mutual funds you had in your 401k if you want to. But why do that if the returns there are mediocre compared to the potential returns with some of the other assets? You can trade futures. You can trade the foreign exchange market. You can trade options. You can trade stock, maybe some real estate, a number of options or choices that you have within that self-directed IRA, and you've eliminated the fees. Now, we want you, if you're going to do that, do it with confidence. Regardless of where you're investing, how you're investing, you always want to do it with confidence. That confidence starts with education. And it's not just education, it's training. It's more than just giving you knowledge. It's a hands-on, skill-building application of the education that's really important. This is when I use that example of a golf with, playing against somebody that just bought a set of clubs, didn't have any training, or playing against somebody who had a great set of clubs and played with the club pro and got lessons from the pro. That's kind of what we do with our education. We give you some great tools, some great resources. In fact, one trading platform, our Click trading platform, trading analysis, education platform, which we really go into more detail in these classes. But that's part of it. But then you have hands-on training with somebody who does this on a regular basis, somebody who can help you if you have issues. Like if you're playing golf, you start out and you have a slice or a hook, you want to probably go to a pro to get that straightened out.
You're right. It takes practice, but you need somebody to mentor you, someone to guide you through that process and to teach you. I mean, all pro athletes have a coach. Same thing in trading and investing. Al, when we talk a lot about retirement accounts, you mentioned earlier eliminating fees. That's one of the biggest, probably one of the most important things in retirement accounts is to lower those fees.
Mm-hmm.
Now, there's techniques where the average investor can potentially do that. One of the biggest problems with retirement accounts being managed by somebody else is those mutual funds that you were talking about. There's a lot of fees that come along with them. There's front-end fees, back-end fees, load fees, there's prospectus fees. I mean, there's fees for everything out there. And you can actually just Google the real cost of mutual funds, and you'll find out they're hindering your retirement confidence. Now, what are some of the things, or what's an alternative to mutual funds? There's a thing called an ETF that's very similar to a stock.
Yeah.
What are some of those perks to that ETF, and why are so many investors utilizing those rather than mutual funds?
Yeah, an ETF is not an alien being. It is actually, it stands for Exchange Traded Fund. It's a fund that trades on an exchange. It's similar to a mutual fund in that it is a basket of something. It's a gathering or a compilation of things that address a certain sector or industry. There are exchange-traded funds that will mimic the S&P 500, the Dow, the NASDAQ. There are probably thousands of ETFs, some that will mimic technology, some financial, some healthcare. Whatever your goal is as far as what you want to invest in, there's probably an ETF that will do that. One of the great advantages there is the low cost. It's very, very minimal, so you've kind of eliminated the big disadvantage of the higher fees in a mutual fund. With a mutual fund, let's just say that something happens during the day and there is a huge negative impact on the market, and we are seeing it like when the Twin Towers were hit. Mm-hmm. The market just cratered. Well, what if you own a mutual fund and you want to get out of it when something like that is happening? You can't. The mutual funds cannot be purchased or sold while the market is open. Market has to close so everything can settle with those funds before a sale or purchase can be made. So an ETF, exchange traded fund, trades on an exchange like a stock, has a symbol like a stock. You can buy and sell it at any time. With a mutual fund, what can you do to protect the downside? Nothing really. You cannot put a stop loss on a mutual fund. You can't short a mutual fund. But you can do that with ETFs. You can have a stop loss on an ETF. There are what we call inverse ETFs, which go the opposite direction of what they are intended to mimic. S&P 500, for example, has an ETF that will mimic it as far as its upward movement. So if the S&P is up 10%, it should be up about 10%. But the inverse goes the opposite. So if the S&P 500 is down 10 or 20%, the goal there is for that inverse ETF to be up close to 10 or 20%.
Yeah, and Al, it's getting close to the end of the show, and the key is to have more confidence in your investment portfolio, your investing career.
Exactly, and that is what our education is geared towards. It's developing confidence.
You're right, and there's so many different things that the public just don't know about. People don't know what ETFs are. They only know mutual funds because that's what they're sold. That's that whole conditioning. Everybody is conditioned to do exactly what Wall Street wants them to do. Al, you always have some great words of wisdom. Let's hear them today.
Well, if you're thinking about wrapping your arms around your own assets, this is the problem. You're always going to find people telling you can't do it. They're going to discourage you from trying, probably because they tried and they couldn't do it. But if you let them do that, you'll never achieve your potential if you let those other people control your future. With proper education, if you combine that with ongoing support and mentoring, we want you to go from assuming you can't be successful to having the confidence to know that you can be successful.
It's almost like that horse racing. Horses have those blinders on. That's the thing you need to do with trading and investing. Have blinders on and have your objective and your goals in mind. Don't forget to subscribe to Investing with Confidence wherever you listen to podcasts, but also check out the YouTube show. Until next week, Investing with Confidence. Retire young, my friends.